Irish people do not like to talk about money. It's a tale as old as time, and one that continues to be true today. In 2021, Bank of Ireland conducted a survey into the behaviours of 1,000 Irish consumers, and it was found that 74% of people don't talk about their finances at all, or only if they have to. The only topics that Irish people hate talking about more than money are death and religion. Words used to describe money conversations by those surveyed included uncomfortable, inappropriate, and embarrassing. Not surprising, seeing as generation after generation in Ireland have been brought up to believe that money is a taboo conversation. And among the worst of money conversations are conversations about borrowing money, bank balances, and how much money you make. Now look, it's totally understandable why people don't want to talk about money. For those who have high personal debt, high expenses, and or low incomes, there is an inherent fear of judgment anytime the prospect of a money conversation arises. Even for those who are in objectively strong financial positions, talking about money can be even more difficult because they don't want to come off as arrogant or rude around their peers. None of this, however, is conducive to a financially educated society. And if we want to improve our collective financial well-being, we need to be more open to conversations about money. A big part of that is being more open about how much money we earn. Knowing where one's income sits in relation to the rest of society can be really helpful for making sensible financial decisions. It also allows one to be more cognizant of other people's financial situation. A recent article in the Irish Examiner talked about how one woman felt insecure because her friends kept talking about weekends away to Madrid and Amsterdam like it was no big deal. For her, however, such a trip would be totally unaffordable after accounting for mortgage repayments, childcare costs, and the general cost of living. Income disparities within friend groups is something that many people can relate to. Whether it's going to a fancy restaurant and having to split the bill equally, or feeling peer pressure to attend each and every social event, we've all experienced a time where we felt a certain level of financial unfairness in social situations. More often than not, there is no malicious intent behind this. In fact, the high earners within the friend group are probably oblivious to the fact that not everyone has the same capacity for spending, and they can't really be blamed because, again, we don't talk about money, and if we don't talk, how are people expected to know? So in the spirit of that, let's talk about salaries in Ireland with the hope of demystifying and destigmatizing conversations around the topic. First things first, what is the average salary in Ireland? According to Morgan McKinley, who are the salary experts in Ireland, the average salary in Ireland in 2023 is around €45,000. Full-time workers in Ireland on average make €3,683 a month, equating to €44,202 a year before tax. Looking at PwC's tax calculator and accounting for the changes made in budget 2024, a gross salary of €45,000 would leave you with €36,234 annually after tax, which is €3,020 per month or €697 per week. This ignores pension contributions, other income sources, and any additional tax reliefs that an individual may be entitled to, such as the rent tax credit or mortgage interest relief. Side note, as a result of the changes made in budget 2024, an individual earning €45,000 per annum will save €756 in 2024 as compared to 2023, which is nice. So if you're taking home €697 per week after tax, that is considered an average income, which may or may not come as a surprise. Let me know in the comments. What's interesting about the average salary being €45,000 is that it's barely above the threshold for the higher rate of income tax of 40%. The threshold for the higher rate of income tax in Ireland in 2024 is €42,000. That means that for the most part, only those earning above average salaries will be exposed to the higher rate of tax, ignoring income from other sources. This is what we'd expect from a progressive income tax system, in that the highest earners pay the highest rate of tax. When we look at data from revenue, we can see that 31% of taxpayers are paying income tax at the higher rate of 40%, while 61% of taxpayers are paying standard rate tax at 20%, and 7% of taxpayers are exempt from income tax altogether. 10% of taxpayers have gross incomes in excess of €100,000, and in total, they account for 39% of the total income earned in Ireland. Crucially though, they account for nearly 63% 10% of the total income tax and USC collected, which again is indicative of a progressive tax system. A key takeaway here is that while an above average salary is desirable, it's important to remember that it comes with approximately double the amount of income tax for every €1 earned above €42,000. But let's take a look at where different salaries sit within different percentiles in Ireland. A report on income inequality by Task, which is the think tank for action on social change, provided some insightful information about the top 10% of earners in Ireland. Bear in mind that these figures are from 2016 but serve as a useful guide nonetheless. In order to be a top 10% earner in Ireland, you need to have a gross salary of €69,511.01. That would translate to €48,974 per annum after tax, which is €4,081 per month or €942 per week. This is more than what's required for top 10% status in both Spain and Sweden, but is more or less on par with what's required in the UK. In Ireland, top 6% status would require a gross salary of €85,582.11. Top 3% would require €113,955.88, while top 1% would require €189,701.69. These figures are somewhat in line with revenues figures from 2015, which provided an additional top 0.1% earners threshold for employees of €476,965. You can see that the thresholds for self-employed individuals are much higher. Fun fact, a gross salary of €189,701, i.e. a top 1% earner in Ireland, would leave you with €106,656 after tax. That's €83,045 lost to income tax, USC and PRSI. There's some interesting findings contained within the Task report about the top 10% of earners in Ireland. In terms of occupation, the top 10% of earners is predominantly composed of professionals, managers and associate professionals. There are more men in the top 10% than women, and this distribution intensifies as you approach the top 1%. High-income households are larger than low-income households, and households in the top 10% spend twice as much on average per week than the overall average weekly expenditure for all households. Strikingly, when comparing spending patterns between high and low income households, it was noted that high income households spend 6 times more on healthcare, nearly 100 times more on pensions, 11 times more on holidays, and nearly 111 times more on childcare. Given that these figures came out at a time when inflation was low, one can only imagine that the multiples are much higher today. Obviously, it makes sense that those earning higher than average salaries would have a higher capacity for spending. However, one extremely common misconception is that having a high income means having a high net worth. That is most certainly not the case. Even in the Task report, it was noted that, quote, the top 10% identify themselves as more well off than others, but not financially stable. Many report having little to no disposable income, especially those that live in Dublin. They feel stuck between having too much income to qualify for welfare support programs, but too little to pay for post-secondary education, healthcare and childcare. This is what's commonly referred to as the squeezed middle class. You've got a good income, but not good enough to support higher mortgage repayments, higher rent, childcare fees, and a higher overall cost of living through groceries and other essentials. Oftentimes, when someone is in a position where they've ample discretionary income relative to their peer group, while salary is important, other factors like having low living expenses and or not having children can also make a huge difference. The lesson here is that it's not just about the income. The expenses are equally as, if not more important when it comes to financial well-being. Plus, just because someone is a high earner, that doesn't mean that they're good with money. Most high earners fall victim to lifestyle creep, where their expenditure increases alongside their income. This is why many high earners end up living paycheck to paycheck and never actually accumulate any wealth, whereas someone on an average salary could accumulate a much larger net worth over time through sensible money management. Here are some key takeaways. First, the average salary in Ireland is €45,000. That is the benchmark against which you can compare your own income. The point of comparison is not to make yourself feel better or worse about your income, but rather to make informed decisions about both your income and expenditure. As for the top 10% and other percentile statuses, the main value of them, again, is knowing where you sit relative to the rest of society and whether you're making the most of your position. Remember, most people who are in that position aren't making the most of it. Don't be fooled into thinking that your salary is a reflection of your own self-worth when it's not. Trust me, you're much better off in a position that you love, which pays a below average salary, than a position that you hate, which pays a lot of money. It's just about how you choose to adapt your standard of living to match your income. However, if you're in a position that you hate, which also pays a below average salary, then it might be time for a change. Finally, understand that the highest earners are paying the highest tax, and that having a high income doesn't always translate into having a high net worth. But let me know, what are your thoughts on the salary numbers from Ireland? Were you surprised by any of the figures, or were they largely in line with what you expected? Leave a comment down below, and thanks very much for watching.